Good evening, Doc Severson here for the TheoTrade report for Thursday, March 30th. We'll start out tonight with the S&P 500 here, and really, again, what I'm looking at, all of this is based on what we see here at the daily chart, because right now at the larger time frames, we certainly have strong trends in place, both on the monthly and the weekly chart to the upside. But both of these are crying out for some type of consolidation, some type of range to set up. We've started to see that happen as of last week. Whether or not that actually continues or whether it V-bottoms from here and does a slingshot move to the upside, we're going to have to find out over the next couple of days. Now, one of the ways that we can determine that is simply just to go along here and draw a trend line from the all-time highs, which was based on the State of the Union address and that big reaction that we had the day after that. The next strong candle that we had was the results of the FOMC meeting earlier this month in March. And here we can see that we've had a bounce off of the bottom so far. Right now, the daily chart putting in a series of lower highs and lower lows. So for this to reverse and V-bottom, what we'd have to see is a couple of things. First of all, we can kind of draw a big box around this price action here. From the lows at about 23.20 all the way up to 23.90. So this is a huge range. This is 70 points on the S&Ps. And for the price to come off of the bottom and just blow right on through this trend line and print a new high would certainly be a stretch for that to happen. Although I'm open to that happening. Anything could happen in the price. I don't want to have so much bias here into one mindset that I don't see what's actually happening. So one potential thing that could happen is the price just keeps on going, and this ends up being just a big slingshot move because too many people got way too short down at the bottom here, and they're still being flushed out to the upside. So that's one potential outcome for this move. Now, another potential outcome for this move, let's go ahead and reestablish our box in here. Next thing that could happen is we see the price come up to here, and just like it's supposed to, it rolls over again and prints another lower high. Now, what happens after that is anybody's guess at that point. Does it continue lower and print another lower low in continuation of the downtrend, or does it somehow print a higher low here and then break out through that trend line and then start the process of the reversal? So that's really kind of a third way that we could see this going. What I find that helps in today's market is to kind of work through all the potential scenarios so that no matter what happens, you're not going to be surprised. So you pretty much got a plan A if this thing blows on through the trend line. It keeps on going up through 23.90. You know what you're going to do in that case. Also, for scenario number 2, if the price fails at this trend line, rolls over, prints another lower high, you know what you're going to do in that case. And then case number 3 is if that happens and then this prints a higher low and reverses from there, you also know what you're going to do in that potential case. So really only one of 3 things are going to happen, and the S&P 500 pretty much sets the tone for these markets now. So watching this and watching this reversal doesn't really matter whether or not you watch the S&P. We could also see the same thing happening on the Russell. So the Russell's showing the same pattern, right? So the Russell's just in the same range, lower highs, lower lows all the way through here. We're seeing the same thing in the Dow Jones Industrials. Same pattern here in the Dow. Lower highs, lower lows, setting up to a trend line. The only one that's really not playing along with this has been the Nasdaq Composite or the Nasdaq 100. It doesn't matter which one you look at, whether you look at the futures or whether you look at, I mean, basically we're printing new all-time highs right now. And a lot of that is being driven by, we actually have a custom symbol here. If we add Amazon to Apple to Microsoft to Google to Facebook, which is just this, bunch that just never seems to quit. This is the aggregate chart that we get with these. And you can see how this is starting to really go parabolic on the monthly chart. Now, ironically, none of these charts are exhausted yet. So these are moving along in a fashion which is allowing it to kind of recharge. It's like a mild jog to the upside. It's not an outright sprint, believe it or not. So going over to the market watch and just looking at, let's look at the S&P 500 sectors first of all. So we'll go in here and look at the sector spiders. And then for today, what we had was, you know, a lot of flat sectors along here like energy and the builders. Financials were very strong today. And that was after some weakness yesterday. What we also had that was strong was industrials, technology, and lastly, consumer discretionary, ironically. And I think this has a lot to do with the consumer confidence number that came out a couple of days ago. So it's worth looking at these sectors just for to keep in mind what's going on here. So if you look at the straight S&P sectors here, again, here's the financials. Financials did have some weakness over the course. I think this was a bad print on the XLF. Do not believe that it actually went down to 22, but it's finding a floor of support here at about $23 a share and has already bounced up close to 24 just as of today. So we've seen a very strong reaction off of here. And so that's the financials. The financials are still working higher without exhaustion. Let's go down to energy. Energy has been dead money for quite some time now. So after a late year rally in energy, it's been nothing but weakness ever since we've turned the clock to 2017. Now, keep in mind here that descending patterns like this always eventually break to the upside. So watch for a trend line break of energy. And I think that at some point we could have plenty of stocks starting to move to the upside. Here was ConocoPhillips actually had a big gap up today. So big mover on the S&P. Next one that we have here is, as we talked about before, was consumer discretionary all-time highs today. All-time highs in consumer discretionary. So people are leveraging or buying stuff on credit. I don't know. I mean, there's such a disconnect here between how people say that their finances are versus what they're actually buying. Here's the builders. Again, consolidating up at the highs. This is actually a nice consolidation pattern up here. If you're into buying at the all-time highs right now, this is actually a decent pattern. We also have healthcare. This has been the big X factor lately, and nobody really wants to deal with this, but you have to look at this and say that this is, believe it or not, an ascending triangle pattern. For those of you that are into chart patterns, this is a big ascending chart pattern here. As to when this breaks out is anybody's guess, if at all. And a couple left to go here. Here's the utilities, and the utilities, after a big move here, are still in consolidation right underneath the highs. And then, of course, here's the industrials, which is, again, very similar to the Dow. So no new information there. XLK, just like technology, again, no new information here. Pushing the highs here, not the same as the all-time highs back from 2000. Ironically, here's consumer staples. Consumer staples, after a decent pullback earlier this year, is just showing another little flag pattern here, hovering right below the highs and threatening to break out higher from here. Now, the one thing I have to mention is after going through all of the S&P sectors here, none of them look particularly bearish. None of them look particularly bearish. Really, the weakest one that we're showing here is actually energy. So energy could potentially set up with another lower high setting up here on the monthly chart. What would have to happen from here is that this would have to set up, bounce back up, set up with a lower high, and then roll over, and then this would turn this into a big lower high. But this is really the only sector out of the S&Ps that really is looking negative. Everything else is just screaming higher here, or is consolidating at the highs. So while I do believe that this market does need to take a rest, as we've talked about many times, again, what we're going to just watch on in the near future is just this box right in here, and the three scenarios out of the box. So these are the three ways that the S&P needs to leave the penalty box going forward. That is it for today's report. Thanks for listening, folks. Have a great weekend. We'll see you tomorrow.